When we talk about control accounts, in our syllabus, we are supposed to cover two types of control accounts. One is what we call the sales ledger control account, the sales ledger control account. This is a control account that is meant to control the debtors. The debtors. By the word control here, we mean that we are going to have quite a number of similar accounts. Instead of having them separately, we can have one account that gives us a summary of all the other accounts. For the sake of this, or for the case of the sales ledger control account, we are going to have these people we call the debtors. Debtors are also known as accounts receivables. This, they are in the group we call the assets. Debtors, it is the other name for accounts receivables. They are actually current assets. These are customers to whom we sold goods on credit, and therefore they owe the business. They owe the business. They have got our money. They have got our money because we made credit sales to them, so they are supposed to pay us. Remember, the accounts, especially the final accounts, are supposed to be prepared at the end of the year. When the year comes to an end, that is when we prepare the final accounts. Now you can understand that from the beginning of the year up to the end of the year, which is normally a period of 12 months, we are going to relate with so many debtors or accounts receivables for that matter. From the start to the end of the year, we are going to interact with quite a number of debtors in between. So we can have a debtor by the name John, Mary, and so on and so forth. So what we are going to do at the end of the financial year, instead of having those individual accounts separately maintained, we can condense them into one big account for all the debtors, and that one big account is what we call the sales ledger control account. So for the sales ledger control accounts, it gives us a summary of all the individual debtors. Let me give you a very simple example for you to be able to comprehend what I'm saying. We can have the following examples. Maybe at a certain date, we sold goods to John. When you sell goods to a customer, you go and open that particular customer's account, whereby you debit, because this is an asset. Assets, whenever they are created or whenever an asset arises, we normally debit. Increase in assets, we normally debit. So we shall come here and write sales. Maybe we sold goods worth 3,000 to John. At another date, we sold goods to Maria. So we shall come here and open Maria account and debit Maria with what? Sales. Maybe we sold goods worth 1,800 to Maria. On a different date, we sold goods maybe to Jacob. We shall come to Jacob account and debit by sales. Maybe it is 2,100. And so on and so on. Anytime we sell goods on credit, we normally debit the customer, who is the debtor, and then we credit the sales. I'm not interested with the sales. I'm only interested with these accounts of the debtors. That is how they are going to appear. Then at some point, maybe they are going to pay them. Maybe at a certain date, John paid by check. So we shall credit this. Whenever a debtor pays, when we sold the goods to him, we debit. But now when the debtor is paying or reducing the money that we debited, we normally credit. So we shall come here and credit this one by bank. Maybe he has paid 2,800. And maybe by paying this 2,800, we have allowed a discount of 200. So we shall also come here and record the discount of 200 such that these and these have balance. So John does not have any debt here now. He has cleared. He has paid 2,800. He has enjoyed a discount of 200. There is no debt. Maybe for Maria, he does what we call sales returns. We sold goods worth 1,800 to Maria, but at a certain date, he realized or she realized that some goods that we sold to her had some defects, and therefore she returned goods worth 300. And then she paid a cash amount of maybe 500. And then maybe the remaining balance she paid by bank, which is 1,000. You see what I've done? We sold goods to her worth 1,800, but she returned goods worth 300. Remember, when she returns, we deduct from here. When we deduct, you record it on the other side. Then she has paid 500, so we deduct from this. Then again, she has paid by check 1,000. So you add all this is equivalent to this, and this account has no balance. She has cleared everything. Then on another date, maybe this one is on Jacob. He pays by cash, maybe 500. And then let alone, we have what we call there. He pays, let us talk about also return inwards of 100, like that. Maybe the person has not cleared, and then it is like that. If you are told to prepare the sales ledger control account from these debtors, what will come and do is to have that one account, sales ledger control. Which is one account. What did we debit? We debited all these accounts by sales. So I'll come here and debit by sales, but now I'm going to add them. 3,000 plus this one, that is 4,800. 4,800 plus this one, it was 6,900. I'll just debit by the sum of all this. So instead of having the sales for each and every customer, I can add them and debit the sales ledger control account in that one thing. Then on the credit side, I will come and credit by bank. Bank here we have 2,800. There is another bank here of 1,000, and there is another. Actually, we have only those two. 2,800 plus 1,000. That is 800. So bank, we have credited the account by 800. What about the discount allowed? It is only this one, so we shall put it there, 200. Here we have got sales returns. Remember, sales return is the same as return inwards. We have got 300 plus 100, that is 400. Then we have got cash. Cash here we have 500 plus 500, 1,000. And that is what will be the sales ledger control account. So the sales ledger control account, it is actually a summary of all the individual debtors accounts. So it controls the debtors. It controls the debtors. At the end of the day, the balancing figure in this sales ledger control account, it is going to be used in preparing the financial statements of that particular business. It is going to be one figure for all the debtors. One figure which is the balance for all the debtors, which we use in preparing the final accounts. So the control account, it is one account that gives a summary of all the individual ledger accounts in which that particular control account controls. So one of them that will be told to prepare is the sales ledger control account. Let me now give you the format of the sales ledger control account. What do we normally debit and what do we normally credit? For the sales ledger control account, it controls asset debtors. And we know increase in assets we debit. So what we are going to debit here are those items that increases the debtors. Those items or transactions that they are going to increase the debtors. Those transactions include credit sales. We shall be debiting here by credit sales like that. We shall also be debiting this one by what we call dishonored checks. That is a check that we received from the customer. We recorded as received, but upon taking it to the bank. Sorry?
Your board is visible. I don't know if it's only me or the rest have the same issue.
The rest, are you okay with the board?
Visible.
Clear.
I can see.
I can see.
It's clear,
Okay.
right?
Mwalimu, maybe you can just move the computer closer so that it's.
The problem, if I move it closer, my board will become smaller. But let me try to change the font. Let me use this other pen. So I've said here we shall be debiting by what we call the credit sales. We shall also be debiting by what we call the dishonor checks. The interest. Okay, the interest on penalty. Sorry? Somebody said something? Or it is somebody who is not muted. Again, you are not muted. Interest stroke penalty on the overdue accounts of the debtors. If that one arises, you also debit. And then we have got the refund to debtors. Those four are the most commonly debited items. Those are the most common items that you are going to find in the question. And if they are in the question, you debit them in the sales ledger control account. Remember, the sales ledger control account will always be talking about the debtors or customers. We will always be talking about the debtors or the customers. And then those items that reduce the balance from our debtors, those items that reduces what we expect to be paid from the debtors will be credited, because decrease in asset is normally credited. And here we shall have cash received from debtors, checks received when they pay. This is when we are receiving from them. Remember, when we receive money from them, the balances is reducing from the year end. The balances is reducing from the year end. I don't know why some of you are saying that the board is not clear, and I cannot see any mark on the board or reflection apart from this point here. The rest of the board is very clear.
Yes.
Or it is
Clear from my end.
Or it
It's
is
also
my
clear
handwriting.
from my end.
Same here, it's clear.
I think it must be a problem with the gadget that you are using. I can actually tell when it is not clear, because even me, I can be able to see it on my screen, and I can see it very clear. Or it is my handwriting.
My end, Mwalimu, it is clear.
No,
Maybe
it is
my
very
handwriting.
clear.
Maybe
It is
it
very
is my
clear.
handwriting that is not ready.
You okay,
It's
Mwalimu?
Very
There's no
clear,
problem on my
Mwalimu.
side.
It is so clear, it is fine.
Okay, thank you. Maybe you can try to adjust your gadget, or you log out and then you join. Maybe it can be helped for that. So I was saying this. What we are crediting here are those transactions that are reducing what we are supposed to receive from the debtors. When we receive cash from them, their balances keep reducing, so we credit. When we receive a check from them, they are paying, so their balance is reducing. The other case is when we have got discount. When we allow them discount, what they are supposed to pay uses. The other one is return inwards. Remember, this one is the same as sales returns. Return inwards or sales returns. When customers return some goods to you, what they are supposed to pay you reduces because you cannot charge them for what they have not actually consumed. What they have returned reduces what you had debited. And then we have got also what we call the bad debts. And this one must be bad debts written off. The bad debts written off. The bad debts written off. The bad debts written off are those debts the business has confirmed to be irrecoverable. What we have confirmed that will not be recovered. So for the bad debts written off, it is an amount out of this. Remember, we have debited what is increasing our debtors. Maybe some of these people we sold goods on credit to, we have confirmed that that person will never pay us because of one reason or the other. So the amount of money that you are supposed to receive from them will reduce as a result of that bad debt. We also have the contra, sometimes known as the settle. I'm going to explain that the moment I do the other control account so that you can be able to relate. The contra or the settle, it also reduces the amount of the debtor's balance. So those ones are going to be credited. I don't know whether we have got one question that is asking about this. Can you look at the document I shared with you? We don't have specifically for that. I thought we had one question that is specifically talking about the sales ledger control account, but we don't have this one. Question number 6 is us talking about the purchases ledger control account. There is one here, but it is a combination of the other one. It's not very good for my exam. Okay, let me go through the other control accounts so that we can do them together. They are combined. Those questions, they are testing both. They are testing both. They are testing both. So that is for the sales ledger control account.
Mwalimu, before you wrap.
Sorry? I'm not wrapped. I'm just wrapping
Before you erase that one.
Yes.
Kindly on the debit side.
Yes.
The refund.
To that,
is it supposed to be on the credit or on the debit side?
It is on the debit. It increases. Refund to debtors. It is supposed to be on the debit side. It increases the balance. The debtors are supposed to pay us. I know it is normally an issue in most of the classes that I normally conduct, and I can explain it like this. The refund to debtors As I explained this, I don't want you to lose track. The control account, it is a summary of all the debtors accounts. It is not for one debtor. It is for all the debtors. So I will give a very simple example. If by the end of the year, from your own calculation, you are supposed to receive 30,000. This is what the debtors owe you as the business. All the debtors combined, they are supposed to pay you 30,000 so that all of them can clear their accounts. But in the process, you receive cash received. You receive this cash from one of the debtors. Let's say you receive 15,000 from the debtors. Remember what I've said? At the back of your mind, you know all the debtors combined, they are supposed to pay you 30,000. And if they pay you 30,000, nobody will be having a balance. One of the debtor pays you 15,000. How much do you expect now from the others?
15.
15,000.
Yes, the balance from all the rest is what? 15,000. Very correct. Then you realize this particular individual debtor who has paid you 15,000, that debtor has overpaid by 2,000. The person was supposed to pay you 13,000, but because the customer did not deduct the discount that you had allowed him or her, the person paid the 15,000. Therefore, you are supposed to do a refund of 2,000 to that debtor because of the overpayment. So, if this person now is supposed to pay 13,000, if the person is supposed to pay 13,000, what will happen to the balance? Are you going to expect still 15,000?
No, you expect 17.
We will expect 17. Maybe it has confused a few. Your total amount that was receivable was 30,000. Somebody paid you 15,000. So from your calculation, you are expecting 15,000 from the rest of the debtors. But this person who paid 15,000 overpaid by 2,000, so you are supposed to do a refund. If you do a refund to this person of 2,000, therefore this person is like he paid you 13,000. So if this person paid you 13,000 and you are expecting 30,000, so these ones we add that refund here. We add the refund here so that we expect what? 17,000. So when you refund, it increases the balance of the remaining debtors. That's why refund is going to increase the debtors balance. And that's why it is normally there. Are you together? That is the reason. That is the reason. The reason being, it is an account for all the debtors. If one debtor pays an amount, you normally do a deduction. Because when they will pay by check or by. When they pay, it reduces. But if an individual debtor overpays and you refund, then it simply means that that refund that you have refunded this, it is going to increase the balance of the others. That's why it is normally recorded on that debit side, because it results in increase in debtor's balance. Hope it is clear.
Excuse me.
Yes.
What if now the debtors pays less?
If the person pays less, there's no problem. You just record what he has paid here. What has been paid is what we have here. Either the debtor will pay by cash, you just record that same amount here. If it's paid by check, you just record the same amount that he has paid here. And then the balance is actually going to be calculated here as the balance carried down. Remember the balance carried down that we are going to write here. It is the balance carried down for all the individual debtors. Let's say, let me clarify your case. Maybe this one was an account for Jacinta. Jacinta, we had sold goods of 1,000. She has paid by cash 800. She has paid 800. You know, here there is a balance carried down of 200. If we had another person, maybe by the name Michael, We made the sales to Michael of 1,200. Michael has paid by check, maybe 900. There is a balance current down of 300. If this were the only debtors that we had, you realize that when we shall be doing our balance current down here, it is going to be this plus this, which is going to be 500. So for the balance, if the person pays less, we don't have any problem with that. We simply record it here as either cash receipt or check receipt. And then if the person has not cleared, the sum of all the balances in each and every debtor's account, it is going to be summed, and that is going to be our balance for the sales ledger control account. So there's no problem with the less. But for more, if you do a refund, it will increase the balance for the rest. So it is normally debited. So you need to understand that what we normally debit for the sales ledger control account, in most cases, it is credit sales, dishonored check, interest or penalty. Interest or penalty is what you charge your customers when they delay the payment. You can agree with your customer that I'm going to give you a credit of 2 months. If after 2 months you have not cleared, I will start charging you an interest of maybe 10% per week. That interest, as you charge the customers that interest, it is going to be increasing the debtor's balance. That's why it is normally debited. For this honored check, this is a check that has been rejected. Remember, at one point, that check was received. The moment it was received, it was credited here. But when you take that check to the bank and it is rejected, that person has not paid you. The moment I give you a check, you take the check to the bank rejects the check, I have not paid you. So you will add back the money. The dishonored check is debited, it is like you are adding back the money to the account of the person from whom you can receive that check. So that is how it is. Any other question?
Yeah, Mwalimu, the the other one, I did not understand why it is adding onto the other debtors when it was a discount to this particular debtor. Does it mean that the others will need to cover for the 2,000 you had allowed as discount?
Okay, I've not got it clearly.
I'm saying for the previous question where we had 15,000, but he was supposed to pay 13,000. You said the 2,000 was to be discount allowed, but the person has paid it. Why does it need to increase the other debtors' debt when it was a discount you had allowed to this particular one?
Anyway, that one was an example that I was actually explaining the scenarios where a refund can arise. A refund can arise whereby you had allowed a discount to your customer, but then the customer is paying you, he or she does not factor that discount to pay. That one automatically will result into refund. Another case that can result into a refund is the sales returns. You sell goods to a person. Before the person inspects the goods clearly, the person pays you the full amount. But upon investigating the goods that you have sold to the person, maybe the person realizes that some of the goods that were packed, others were defective or they were not fulfilling the specifications that were issued. So the moment you are paid and then later on you return the goods, it is actually now the seller to refund you amount of money equivalent to the goods that you have actually returned. So it is going to attract a refund. So in this case, it does not mean that the other debtors will cover that. I was giving a very general example in the sense that you expect all your debtors, all of them combined, they can be 10. Maybe another one of them owes you 1,000, another one 1,500, another one 10,000, like that. But when you add all of them, they are supposed to pay you 30,000. One of the debtors pays you. This is now the cash that you have received from one of them. Let's say you have received 8,000. The moment you have received 8,000, to you, you don't know that there is an overpayment here. You just consider that if I was to receive that 30,000, one has paid me 8,000, then it simply means that the balance is now 22,000. This is what the remaining debtors need to pay me for them to clear all the accounts. But the moment you realize that this person has overpaid, there is an overpayment maybe of 1,000. This person was not supposed to pay 8,000. It was actually supposed to be 7,000. I don't want to give the reason as to why the overpayment arose, because that is maybe the point where you are actually not getting clear. So the person has paid an extra 1,000. So what do? You are going to refund. The moment you refund that 1,000, then your balance from the other debtors will now increase by 1,000 because this person has paid you 7K. If he has paid you 7K, then the others now, so that we can hit this, we're supposed to pay you 23,000. This is now the case here. 22,000 plus what you have refunded to give you 23,000. So the refund, it is going to be paid, but it is going to be added to the balance, what we have not received. Is it okay?
Yes, thank you.
Yes, yes. Okay. After having said that, anybody with another question as far as the sales ledger control fund is concerned? Credit sales, this dishonored check, interest or penalty charged on overdue debtors accounts, refund to debtors. These four, whenever you see them in the question, know that they are supposed to be debited in the sales ledger control account. Reason being, they increase the debtors balance. These ones, cash received, checks received, discount allowed, return in or sales returns, bad debts written off, contract or settled. We also have something else here. We also have the bills receivable. They are all credited. Why are they being credited? Because they reduce the debtors balance. They reduce the debtors balance. What you expect to be paid by the debtors decreases. Once you have that understanding, then we can talk about the
Mwalimu, sorry.
Yes.
Bills receivables, you've totally lost me. What's that?
The bills receivable, it is actually, we normally call them negotiable instruments. It is a mode of payment. It is a mode of payment. If I owe you, I can give you a bill of exchange. I can give you a bill of exchange, but it is written clearly when I'm supposed to pay you. It is like what can I say? It is an agreement that is binding by law. I can give you a bill of exchange whereby I say by date 10 of April, I am going to pay you a given sum of money, which is written in that bill of exchange. Once I have done that, it is like I've committed myself to pay you. And actually, you can take that bill of exchange, take it to the bank, and the bank can give you the money, so that by the date I'm going to give you the money, it is like now I'm going to pay you pay the bank. So if I was to pay you that 20 days from now, you can go with this bill of exchange to the bank to do what we call, you discount it there. You discount it in the bank, so the bank will give you the money, but the bank will not give you that K. The bank will give you less. Maybe it is going to give you 28K. Then, when that day comes, I'm going to pay the bank this 30K. So the 2,000 is like an interest the bank has charged you. I'm going to pay 30K, but the bank gave you this because you are in need of money now. So it is a mode of payment. Just know that it is a mode of payment whereby the buyer commits himself through the bill of exchange, and then upon that particular date written on the bill of exchange, the buyer must honor that particular promise by paying. So it is a payment, so it reduces what you are to receive from the debtors. Okay?
All right.
Yes. It is a negotiable. I don't know whether you normally cover this one in your business law, in business law unit. I know it can be there, negotiable instruments for those who have covered them. It is a mode of payment. It's a mode That is what I can say from the accounting side. So then you are going to balance your account. The purchases ledger control account. The purchases ledger control account. This one controls. It controls creditors, or also known as the accounts payables. The creditors are also known as the accounts payables. These are actually our suppliers who supply the goods to our business on credit. Creditors or accounts payable, those suppliers who give us stock on credit, they are known as creditors or accounts payables. The same case, we owe them. We owe them. Remember, for the debtors, they owe the business. But for the creditors, it is the business who or which owes those particular suppliers. So this one, or their liabilities. This control account controls liability. So it is a liability account. It is a liability. This one was an asset account. Increase in asset to debit, decrease in credit. This one is a liability. This one is a liability. Increase in liabilities with credit. Decrease with debit. So for the purchases ledger control account, it is like the opposite of this one.
Mwalimu, just go back to where you're saying increase in liabilities, we debit.
We credit. Increase in liabilities with credit. And the decrease is what we debit from the rules of the ledger account. From the rules of the ledger accounts. So you realize that these ones that were increasing, they were being debited, but here now they will be credited, but they must be related to creditors. How do creditors balance increase? How do creditors balance increase? We normally create creditors when we purchase from them. The moment we purchase something on credit, that particular supplier is our creditor because we owe the person. So here, what increases the creditor's balance? We are going to have credit purchases. It's one of them. Then we shall have, if there is any, in most cases it is rare, dishonored check. This one, it must be written if it is there to supplier. If we had issued a check to the supplier and then the supplier took it to the bank and it was dishonored, it is like we have not paid that person. That money will be added back to our account to pay. Then we also have interest, stroke penalty, but must also be charged by suppliers. When we delay paying the suppliers, they might charge us or they might impose a penalty. That penalty will increase the amount that we are supposed to pay them, so it is credited. And then lastly, it is the refund from suppliers. Those four items, they increase the creditors' balances. What we are supposed to pay our suppliers will increase as a result of this. When we do credit purchases, when the check that we had issued has been dishonored, no, when we issued the check, it reduced, but if it was dishonored, the money is added back because we have not paid. The interest or penalty charged by the suppliers, it increases what we needed to pay them. Refund from suppliers. The same explanation I gave to refund to customers, the same. But now, remember, for the purchases ledger control account, it will be talking about creditors or accounts receivables, and the question will more be talking about suppliers. This one talks about the customers, this one talks about the suppliers. Then what we debit in the purchases ledger control account is what reduces this, what reduces the amount that we have credited. How do we reduce the amount that we are supposed to pay our suppliers? We reduce that amount by doing what we call cash payments. When we pay by cash, we are reducing the, we are supposed to pay them. The checks issued to them, we are reducing the money. When they give us discount, it reduces what we are supposed to pay them. So here we shall have the discount received. The discount received. It reduces what we are supposed to pay them. Purchases returns. Purchases returns is the same as return outwards. When we buy goods, when we purchase goods on credit, it increases the debtors balance. But when we return part of the goods that we had purchased, it reduces that initial amount. The purchases returns. Then we are going to have the bills payable. When we issue a bill of exchange to them, it is like we have paid them. Remember, I told you a bill is like a mode of payment. So when we receive it, it's like we have been paid, so it reduces what we expect from the customer. But when we issue a bill of exchange, what we call the bill payable, it's like we have paid that particular supplier, so it reduces the amount that we're supposed to pay. Then this contra, remember this contra is credited here. The same amount should be debited here, contra or settle.
Mwalimu, a question.
Yes.
The bills, wait.
Bills payable or receivable?
No. I've understood. I was wondering if the bills payable and bills receivable is the same. So I've understood. Okay.
The contra or the settle, it is a funny scenario. These are the amounts that normally cancel out because I owe you and you also owe me. If I owe you 1,000, you owe me 1,000, then that money cancels out. That is where contra comes from. So a business can be owing another business, that is the supplier, a certain amount of money, and then the same supplier owes the business a certain amount of money. To make it more clear, we have got two businesses here, A and B. A supplies B and B supplies A. If A supplied goods worth 1,000 to B and B supplied goods to A worth 1,000, then the two amounts cancel out. There is no business that owes the other. So it reduces. Remember, when you sell these goods to this, B is your debtor. But when you buy goods from B, B is your creditor because you need to pay the person. So this amount of money, that when it is a contra, it reduces the debtor's amount and reduces the creditor's amount at the same time. So out of these debtors that I'm supposed to get money from, 1,000 is from B. That you may cancel, na 1,000 ananidai. So the 1,000 that cancels the debtors is the same 1,000 that cancels the creditors. Kwa hivyo hiyo pesa inaapia kwa debtor, settle because we reduce the debtors. Na pia inakuwa kwa upande wa debit because we reduce the creditors. I don't know whether it is clear.
Yes, mwalimu.
Yes, the setup, but not necessarily the same amount. In the pattern, we sold the goods worth maybe 1,500 B, lakini B ametuzia vitu za 1,000. Unajua kama tumemuuzia vitu za 1,500 na yeye ametuzia vitu za 1,000, sisi tutamdai 500, lakini 1,000 ime cancel out. So sisi tutamdai only 500. The 1,000 we were to receive We were to receive 1,500 from the person, like in 1,000 in the council. So to receive 1,000 less from the debtors, we are going to receive 1,000 less. And when we come to payment, because purchases happen as when we shall be paying, we shall also be paying 1,000 less because we are moving here, yake na yangu will cancel. So it cancels the debtors and the creditors at the same time. So it reduces the debtors and it reduces the creditors at the same time, the same amount. And we normally take the smaller amount, but that is not an issue because you cannot be given that kind of a question whereby you are told this one owes this one owed this. You will be given a figure umeambiwa, it's a contra. So you need to know if it is a contra, the same figure that you put here is the same figure that you debit here. Which one? Before we go to the questions, allow me to emphasize two things. Number one, in the control accounts, we only deal with credit sales and credit purchases. Remember the control accounts tumesema tunadeal na debtors ambayo inakuwa handled na sales ledger control account. Tunadeal na creditors ambao wanakuwa handled by the purchases ledger control account. So in this case, we only deal with credit sales and credit purchases only. Cash sales and cash purchases should not be recorded in the control accounts. Why? Because when I sell goods on cash basis, when I sell goods to you on cash, you are not my debtor because you are paid. A debtor is the person who has not paid for the goods purchased or goods sold to him. So cash sales and cash purchases are not recorded in the control accounts because they are not debtors or creditors. They don't create debtors or creditors. The person paid, and therefore that was the end of the story. Cash sales and cash purchases are not recorded in the control accounts. Get it clear. If you find it in the question, it is only meant to confuse you, but don't allow yourself to be confused. We only pick credit sales, credit purchases. Cash sales and cash purchases, if they are there, ignore them. That is one. Number two, we only deal with bad debts written off. Bad debts written off. Bad debts written off, this is an amount that we have confirmed to be irrecoverable. Amount that we have confirmed to be irrecoverable from the debtors. When you sell goods on credit, you create debtors. You cannot receive this money from them 100% in most cases. Some of the debtors might be mischievous. They will run away with your money. The moment you are now so sure that you are not going to receive a certain amount of money from your debtors, we normally call them bad debts written off. So they will only be on the sales ledger control account. It is not going to be the purchases ledger control account. But in some cases, you can find the examiners giving you another one we call the allowance. Sometimes we call provision for bad or doubtful. Allowance or provision for bad or doubtful debts, they are not included in the sales ledger control account. What we normally use are only the bad debts written off. The provision or allowance, that is an estimate. That is an estimate. We don't use them in the control account. We only use bad debts written off. Amount that has been confirmed to be recoverable. That is the only amount we use. The provision or allowance, never use it. You leave it if it is. After having said so, it is good now we do two questions. I know it will be enough for you to understand the whole concept. Let me start. I will do question 1 and 2. I will review with the others to at your own free time. Question 1 is there. The following balances were extracted from the books of Jembe Limited for the month of April 2018. We are given the opening balances as at 1st April 2018. Trade receivables, remember those are debtors. It is supposed to be captured in the sales ledger control account. Trade payables ledger, those are balances for the purchases ledger control account. And then you are given transactions during the month, dishonored check from credit customers, debit them in the sales ledger control account. Cash received from credit customers, it reduces the debtors, credit that amount in the sales ledger control account. Refund to customers for overpayment, it increases the debtors, so we debit the sales ledger control account. Contra settlements, they affect both. You credit the sales ledger control account, you debit the purchases ledger control account. Remember what we said? For the sales ledger control account, anything that reduces its balance, it is credited, but anything that reduces the balance for the creditors in the purchases ledger control account, we debit. So it is credited for sales ledger, debited in the purchases ledger. The same amount will appear in both. Discount received, it reduces what we are supposed to pay the suppliers, the creditors. So you debit in the purchases ledger. Payments to creditors by check, it reduces the amounts that you are supposed to pay the suppliers, ambayo una debit kwa purchases ledger. Discount allowed, it reduces what we are supposed to receive from the debtors, we credit sales ledger. Receipts from customers by check, it reduces the debtors, or even a credit the sales ledger. Allowance from suppliers. Allowance from supplier means that the suppliers have given us something similar to discount, so it is going to reduce the creditors with debit for purchases ledger. Credit purchases, una credit purchases ledger. Cash purchases, ignore. Hiyo ndo nilikuwa nawaambia. Cash purchases, ignore. Credit sales, debit the sales ledger. Cash sales, ignore. Na mambo inakuwa shwari if you do that. Let us do it now practically. Hope you have those formats down. When that question is given, it's better to have the two accounts so that you can do them simultaneously. So I just opened my two accounts for the sales ledger. Actually, let me use the one that they have used at the point of the required. The trade receivables control account. The trade receivables are debtors, and that is the same as the sales ledger control account. The debtors control account is the same as the trade receivables control account. It is the same as the sales ledger control account because it's one and the same thing. Let me record it as trade receivable. And the trade payables. Higher, we start. The following balances were extracted from the books of Jembe Limited for the month of April 2018. Always start with the opening balances and you put them the way they are given. For this one, remember it is the sales ledger. Don't get confused. The payables are the purchases ledger. So for the trade receivables, the debit is for 20,000. So come here and write balance brought down 420,000 on the debit. On the credit, come here and write balance brought down 1484. Those balances are captured. Somebody might ask me a question. Why do we have balances on the debit and the credit? Why is it that we have the balance on the debit and the balance on the credit and both are opening balances? It is possible. And this simply means that this for 20,000 that is on the debit, this is what we are supposed to receive from the debtors by the start of the year. By the start of the year, our credit customers, they owe us for 20,000. But this figure of 1484, rather, this figure of 1484, it is what we are supposed to refund our customers. It is the business that owes the customers, and actually that money should be refunded because of the reasons that I highlighted. Either the person paid without factoring the discount allowed, the person had cleared the account and later on he returned some goods to the business. All those instances will result into an overpayment from the year end. So the business needed to refund that money. So this is the money we need to refund some of our customers. But this is what we are supposed to receive from them. Remember, under normal circumstances, we are supposed to have a debit balance. So for the sales ledger control account, the opening balance should always be the debit. We must be given the debit balance. This one is not a must. But when it is given, put it there. But this one should always be there. The reason why I'm saying that this one should always be there, because you can get a question whereby you are told the sales ledger balance at the start, they just give you for 20,000, but they don't tell you whether it is a debit or credit. They just give you a figure and they remain silent. So what you need to understand always, that this is a set account, says they will always have a debit balance. They will always have a debit balance. And if we are given both, this one will always be more than this. So just note that. This is what we are supposed to receive from our customers at the start of the year. This is what we are supposed to refund to our customers at the start of the year. This one is not a month. Yes.
Excuse me, Malim.
Yes.
Under what circumstances would we have this 1484 and trade receivables, yet we still have the purchase ledger?
I didn't get your question. Can you come again?
Now I'm wondering how we're having this money, 1484. You say this is money that we owe the people to whom we sold goods to.
The customers, in short, yes.
The customers.
Yes.
I wonder, under what circumstances will that one happen?
I've given two circumstances. Number one, a customer can pay you. You know, you can reach an agreement. I tell you, if you pay within 1 week, I'll give you a discount of 10%. You pay within 1 week, but you did not factor the 10%. You just paid the whole amount. Maybe it was 10,000 you are supposed to pay. You know, if you paid within a week, you are supposed to less 10%. You are supposed to less 1,000. So you are supposed to give me 9,000. But you paid and you paid the whole 10,000. So from my side now, as the seller, I need to understand that I was supposed to enjoy a discount of 1,000. So that 1,000 will appear in my sales ledger because I'm supposed to refund you. You paid 10,000 instead of 9,000. You did not factor the discount. Another case is this. Yes, I sold you goods worth 5,000. You paid the 5,000, correct? But later on, after you have cleared your balance, you realize that some items were faulty. Maybe they were worth 500. So you return those goods worth 500 to me as your seller, but you had already paid for the entire consignment. So it is me to refund you the 500 for the goods that you have returned. So those are the two circumstances in most cases whereby the seller might be forced to do a refund to the customer. Are we together?
It's okay, man.
Mwalimu, just a point of clarification. Why aren't we recording that balance on the credit side? Why aren't we recording it as balance brought down? Instead, we are recording it as balance carried down.
That is a general concern. It's supposed to be brought down. You are correct. You are correct. Okay, that is actually that. So for the balances, you capture them like that. But if the question is very silent, you can be told that the balances, they can give you balances as 1st April 2023. Sales ledger for 20,000. And they don't tell you whether it is debit or credit. When it is like that, my friends, this is an asset account. So the sales account, or sorry, the debtors account should always have a debit balance. So it should be here. So don't be confused with that. They have not told me whether it is debit or credit, so I'm going to put it here or here. No. For the sales ledger control account, that is an asset account. Assets will always have a debit balance. When they give you both, they must tell you which one to debit and which one to credit. When they give you both, they must tell you this one is for credit, this one is for debit. But when they give you a single amount, just know it is for the debit side. Are you together? For the purchases ledger, the trade payables ledger, you are told that the credit is to 40,000. Balance brought down to 40,000 on the credit, and then 1708 on the debit. Balance brought down to 1708. Again, you put them as given. The figure on the debit, put it on the debit. The one on the credit, you put it on the credit. And then the other thing, realize that this purchases ledger, this one is for the creditors, which are liabilities. Liabilities, they have a credit balance. So the credit will always be more than the debit. And actually, it is the same explanation that I've given. Remember, for the creditors, it is the business to pay them. So this amount that is on the debit, it is what the creditors need to fund to us, what we are supposed to receive back from some of our creditors. Why? Because we overpaid them, so they are supposed to refund us this money. We did not factor the discount that we received from them. We did what we call the purchases returns after we have cleared our accounts, so they are supposed to refund us this money. So in the question also, when the question does not, when the question gives you a single amount for the purchases ledger or the trade payables, just know it is supposed to be on the credit, because liabilities normally have credit balance. Credit balance. For the sales ledger, it is always debit. But for the purchases, it is always credit. But when you are given both figures for the debit and the credit, they will tell you which figure to press on the debit and which one to press on the credit. Let us go to the transactions for the month. Dishonored check. So the key thing there now is to sort out which one comes here and which one comes here. This one normally talks about debtors or customers. When it is an increase, put it here. When it is a decrease, here. This one will talk about the creditors or suppliers. When it is an increase, you put here. When it is a decrease, you put here. That is how you sort them out. So the first one, you are told dishonored checks from credit customers. So you can be able to see that we are talking about customers, and it is a dishonored check. We come to this account on the debit. Dishonored check from the customers 13 to 30. Cash receipts from credit customers. When you receive, you reduce these. Cash received come here. Cash received for 5170. Refund to customers for overpayments. We said it should be here. Refund to customers 1470. Contra settlement. It reduces the debtors. Contra settlement.
1 minute.
Yes.
You said when you receive, you credit, and when you remove, you debit.
Come again. I've not understood your question.
I'm saying in the sales ledger, when you receive, you credit.
Received, cash received or checks received, they reduce the debtor, so you debit credit. Cash received. Can you refer to the format that we had?
Yes, yeah.
Yes. Cash received, checks received. How much checks? Yes, they are supposed to be credited because they reduce the debtors. The contract is 87,850. The same amount should also come here. The contract should appear in bold. Because your pesa will cancel for debtors and it can cancel for creditors. It should come to bold. Discount received in a reduce what you are supposed to pay the suppliers in the company. Discount received 45,780. Payment to creditors. Our creditors and your suppliers. Ukiwalipa tunapunguza deni na hapa payment. Ukiwalipa either by cash or by check, you reduce it by debiting them. Payment by check. $996 520. 996 520. Discount allowed in a reduce the debtors. Discount allowed. 50, 645. Receipt from credit, receipts from customers by check. Upon a check received. Checks received 830 to 35. Allowance from suppliers. Unajua allowance ina reduce, allowance wakutupatia na allowance ni kama tunawalipa less. It reduces what we are supposed to pay them. Anything that reduces the debtors, it is captured here. Allowance from suppliers. $16,912. Credit purchases inakuja hapa. $1,085,098. Cash purchases ignore. Credit sales, it increases the debtors, it comes here. $1,318,100. Cash sales, ignore. Alafu sasa ikifika hapo, you have got like all the marks. Now you are now supposed to do the closing balances. The closing balances. Balances at that year, April, the end of April. Receivables, hapo sasa ndio unastahili uwe macho. For the opening balances, we put them as given. But for the closing balances, we put them on the opposite side. Ile figure umeambiwa ni ya debit, unaweka credit. Like here, umeambiwa aje? Trade receivables ledger, ukaambiwa credit. Ukiambiwa credit, wewe weka debit. Huwa zinaenda the opposite side. But for the closing only. For the opening, tuliweka vile tulikuwa tumeambiwa. Ya debit ikaenda debit, ya credit ikaenda credit. But for the closing, when you are told it is credit, put it on the debit. Put it on the debit. So you need to come here and say, balance carried down on the debit. And the closing balances will always be carried down for the end. For the start, it is brought down or brought forward. This one is carried down, put 22 for the trade receivables. For the trade payables, umeambiwa debit, sasa utaiweka upande wa credit as balance carried down 770. Hivyo. Alafu kutoka hapo, you confirm whether it's balanced or not. What you do, add this for the trade receivables, either balance or
Mwalimu,
yes.
in the trade payables control account, the balance brought down was 240,100, not 240,000.
240 of this one.
Yes.
Okay, 241,100. Noted. So what you do for trade receivables, this side will be having more. What he minus he, utapata tena utakuwa na balance carried down nyingine hapa. Itakuwa hivyo. Who add the debit, wengine add the credit. This one will be more of this. Kwa hivyo utakuwa na balancing figure katika hesabu hapa. Can somebody add all the debits? Unapata ngapi? Don't have your calculators? For 20,000 plus 13, 30 plus 13, 80, 100 plus 22. I'm getting 17, 53, 535. Let me add what you have on the credit.
The credit is 1181.
1181.
384.
384. So this one is more than this. What is the difference? The difference is now what we shall insert here as balance carried down. The difference of this 17,535 minus that, which is the total of this, is our balance. What is the difference?
Mwalimu, my totals are quite different from what you've put.
Which total? Both?
For the trade receivables control account.
Both the debit and the credit.
Yes.
The debit, you're not getting this?
I'm getting 1,755,000 and 5.
Yes.
Same here. Same here, I'm getting the same figure.
750?
755
5
005.
005.
Go by that. Above the credit, this is the figure you are getting. If you add these figures, if you add them,
Mwalimu, I'm getting 1 million for the credit. 1,175,314.
not this one.
Yes.
1 million.
175.
Huh?
314. 314.
Mwalimu, I'm also getting different from that.
From the two.
Yes, on the credit side, just what
Yes.
the previous person has said, I'm getting 1,175,384 instead of 314.
Yeah, it's that one. 1,175,384.
Yes.
Kwa hivyo tunazunguka mtihani juu ya kukosa your addition na subtraction. See, ati kutojua, but okay. Can you now take this being a 1,755,004? You minus that so that we can get the balance.
$579,621.
621. Good. And that is the end of that account, huh? The sales ledger control account or the trade receivables control account. You come here and do the same. This one, remember, this is the liability. Liabilities credit will be more than the debit. Add hii kwanza credit fund.
Let me see the board, Mwalimu.
Oh, I'm obstructing.
I just came in. Let me just check here. Thank you.
I'm getting 1,325,198.
198, eh?
Yeah.
Limo, I'm getting something different.
Me too.
Because 770 was not added. That's why.
It is added. We are supposed to add it. Silikuwa kwa swali hiyo.
For the previous answer, that's why it's not coming to what we are getting.
I think it's 1,325,868.
800 and 968.
968.
Correct. Can you add now the total of the debit figures?
70.
Too many master.
The board.
Yes. You are getting what?
The difference I'm getting 177,198.
What about the total? You are getting 1,100,000 and
48,770.
770.
okay. So now the difference is total minus that total in the here.
177,198.
That is how you get your entire 12 marks from that question. I hope you have done the copying. I can do it here for the second question. Question 2. That is the question that will serve as our last question for today. It says that the following information was extracted from the books of future traders for the month of October 2019. So we are given the opening balances, transactions during the month, or the particular closing balances. Let us do the sales ledger control account, the purchases ledger control account as at that 1st October 2019. So I hope now we are going to do it a bit faster. Balances as at past, that is the opening balances. For the purchases ledger, it should be on the credit. They are actually told so. Opening is always brought down. 360,000 on the credit. For the opening, press it on the side that we told. If it is credit, what they get the credit. For the sales ledger, it is 220 debits. And the right balance brought down 220,000. Then go to the transactions during the month. Purchases. We said clearly, we only go with the credit purchases. So credit purchases is supposed to be credited in the purchases ledger control account. Credit purchases. The credit is 4,160,000. The cash sales, the cash purchases, ignore it. Don't use it there because it does not create creditors. For the sales, you do the same. Credit sales increases debtors. We are told it is 6,800,000. Refund to cash customers. The word there is cash. If it is cash, if we sold goods to them, the cash customers from the word go, they were not debtors. If there is refund to them, it does not affect debtors. Anything to do with cash. If you remember here, the question is saying refund to cash customers. Remember, we had sold goods to them on cash, and therefore they were not debtors. So when we refund them, it does not affect the debtors' accounts because they were no longer debtors. You know that. Cash customers are not included in the control accounts. Contra settlement, that one will affect. We said it is credited in the sales ledger, but their contra 40,000. Credited there, debited here. The same amount, 40,000. Bad debts written off, that is correct. It reduces our debtors. It comes here. Written off, bad debts written off, 12,000. Increase in allowance for doubtful debts. Allowance for doubtful debts, provision for doubtful debts, never include them. Never include them. We only deal with the bad debts written off. Bad debts written off. So the allowance and provision for doubtful debts, they are not incorporated in the control account. Return inwards, those are sales returns. They come here. $80,000. Return outwards, those are purchases returns. They come here. They reduce the creditors. 60,000. Cash refund from credit suppliers. The moment credit supplier is mentioned, it increases the creditors amount. Refund from suppliers. From credit suppliers, 32,000. Interest on overdue customers' debts. It comes here. This is the interest on customers. Interest on customers' debts. 200. Discount, yes.
Why are we why are we crediting refund supplies?
Because it increases the creditors amount.
Oh, okay.
Did you record that format yenye tulitengeneza? Tulisema refund to customers iko hapa, refund from suppliers inaenda pale. There is that format that we actually prepared before we went to the question. Hapa tulisema ni credit sales, dishonored check from customers, interest or penalty, na refund to customers. Hapa tukasema ni credit purchases, refund from suppliers, dishonored check to supplier, and the other one was what? Interest or penalty. Inaenda pande ile. Refund to customers, refund to from suppliers. Inaenda tukita change. So anything to do with suppliers inaenda chini kusaidia ile kama ni refund. The other thing, interest on overdue to make capture. Discount received from credit suppliers. Discount received in Akuja hapa. We are receiving it from the supplier. It is reducing that debt. Discount received from suppliers. $256. Discount allowed inakuja pande hii. Ina reduce the debt class to $60,000. Total payments to credit suppliers. When you pay them by check or by cash, inakuja pande hii. Any payment, whether by cash or by check, inakuja pande hii. 3,360,000. Total receipts, cash received and cash paid. Sorry, cash received and checks received. Tunakuja hapa hivi. Receipts. Hizo 6,100,000. Once you have done the posting, kazi yenye imebaki yako ni kubalance. Hatujapewa closing balance yenye tumepewa sasa ni calculate. This one will, for this one, remember it is an asset. Assets, they have debit balance, meaning that the debit will be more than the credit. So can you add that? The balancing figure will be the balance carried down. These are side bills for channel. Add the debit, subtract what you have the credit to get to the balance. For this one is a liability. Liability will be more on the credit. So the balance carried down should come here. So that the two sides can be equal. Add this, subtract what we have here, get to the balance. Let us do the first one. The debit to 20,000 plus 6,800,000 plus 8,200. I don't know whether you are getting the same 7,028. 200.
Yes.
Yes, it's the same.
Okay. Let us add the credit 40,000 plus 12,000 plus 80,000 plus 260,000 plus 6,100,000. I'm getting 6,492,000.
Yes.
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 If we ask from this, minus 70, 28, 200. Unapata 536.
36,200.
Yes, 200. Then pick a 7, 028. Here tumemalizana nayo. We do the same to this. This is a liability. Liabilities, they normally have more on the credit. So on the credit side, this 60,000 plus 41, 60,000 plus 32,000. Inakuwa ngapi? 4 millions?
552,000.
552,000. We add what we have on the debit. 40,000 plus 160,000 plus 256,000 plus 3,360,000. Napata ngapi? 3,016,000.
Yes.
Yes.
Yes, Mwalimu.
We deduct from this total on the credit to get the balance. 4,552,000. 7,6,000.
Yes.
That is our balance, and that is the end of that question. Super. That is how we do control accounts. That is how we do control accounts. So I want you to go ahead and try the remaining questions. Azina, you cannot get a question that is complicated. They will always be like this, straightforward, straightforward. So long as you know that the sales ledger, I'm dealing with the debtors, which are the same as accounts receivable, which are assets. We debit the increase, we credit the decrease. So anything to do with the credit, customers come to this account. When it is an increase, debtors happen, decrease the other side. Yes?
Mwalimu, I have a question.
Yes.
I think I might be confused on this issue of refund. When we are doing the formats for the purchases ledger or trade payables, the credit side, when liabilities increase, we credit, right?
Correct.
Yes, so when we say the refund from suppliers is recorded on the credit side,
yes,
I'm a bit confused there, because if are they refunding the business, then in that case, isn't that reducing the amount that you owe the supplier? I don't know. I'm kind of confused there.
Don't be confused. Anyway, our starting point was this. The control accounts, they control all of them. For the purchases ledger, it controls all the creditors, not one creditor, all of them. And I gave you an example, or I can give another one here. If, for example, we were expecting to pay, remember, when we are talking about suppliers here, it simply means that the business normally deals with more than one supplier. We have got ABC Limited, XYZ suppliers, Umoja wholesalers, quite a number of them. But from our own calculation, we know all the suppliers for this financial year, by the end of that financial year, we are supposed to clear them by a total of 100,000. If we pay all of them, we need to pay 100,000. 20,000 to one, 15 to another one, but collectively, this. If we find that we have paid a particular supplier, let's say 50,000, how much are we supposed to pay the others, the balance, for us to clear the 100 back, the 100? The balance is what? Huh?
50.
The balance is 50,000. But this one that we have paid, this supplier that we have paid, if we realize that we have overpaid the supplier by 5,000, and that particular supplier has refund, so we receive a refund from that supplier. If we receive a refund from this supplier of 5,000, then it simply means that we have paid him 45,000. So the balance to the other ones, they will not be 50, they will be 50,000 plus 5,000, which is what? 55,000.
55,000.
It's making sense. Yes.
Yes, yes.
When we receive a refund from a supplier, it increases the balance
Still
of the other.
increasing.
Yes.
Okay. So we are looking at it as the creditors. If one creditor refunds, it still increases what the other creditors, what we owe the other creditors.
Correct.
Okay, that's
That
clear.
is how we look at it.
Okay.
Yes. So always look at the control account like a summary for all the creditors. So if we have
Mwalimu,
overpaid a particular one, we get a refund from him, but that refund belongs to the other person. We earn to the others. Yes, somebody was also asking a question.
Where did we record the increase in allowance for doubtful debts?
I say allowance for doubtful debts, provision for doubtful debts should not appear anywhere in the control account. We talked about 3 things: cash purchases, cash sales, and allowance for doubtful debts. They should not appear in the control accounts. They are just meant for confusion.
Yeah. What makes it different?
Are we together?
You tell us what you love about this.
Yes, Malim.
Yes.
What was your first impression when you, the judge, brought you here?
Maybe if you can just recap.
Because